Do your clients want more details on their invoices for expenses that you bill them for? Well, then you need to know how to bill for expense items. If you have any questions about this topic, you can leave them in the comments section below and I'll do my best to help you. And of course, if you feel the video helped you, I hope you will click like and don't forget to subscribe to get updates on new videos that come out all the time. Expense items are items that vendors provide for us and they get placed on a check or expense or a bill from a vendor. The item is attached to an expense type of account the same way that the income items that we learned about earlier are attached to an income account and placed on an invoice for service that we give to the clients. Now, we all know about the item list, and we remember when we set up the income items on the items list, we had to attach the income item to an income account so that when we placed the item on an invoice, that specific income account would increase. Well, it's the same thing about putting an expense item on the items list. You put an item on the items list the same way and make it a service, but if it is an expense item, you connect it to an expense type of account instead of connecting it to an income type of account, but the idea is the same and it works the same. So, it's the same as income items except they are attached to expense accounts and they are placed on checks, bills, and expenses instead of being placed on invoices. Now, why would you need them in the first place? Well, we use expense items because up until now, billable expenses only had the expense account listed on the transaction. There was really no detail about the items purchased. There's no detail that shows the clients when billing for them exactly what was physically used and what they're getting billed for. If we use an item, however, we have more detail and the detail shows on the invoice so the client can see what expense they are being billed for. For example, if we have supplies expense and we bill it the old way, the client has no idea what supplies we used or how much. But if we use items and we attach them to the supplies expense account, then we can put the individual items on the bills and checks that we pay for and mark as billable, so that when we put them on an invoice, it will be clear to the client what we used and how many and so forth. Supplies expense is the account, and the things on the right that we connect to them are the items. And now when we use billable items, it's more sophisticated, it gives more information, but it behaves a little differently than the way we learned to bill in earlier videos. So let's add two items to the items list, envelopes and stamps, and we'll connect them to the supplies expense account. Okay? Very, very simple. From the main menu, we click List, Items List. Let's make the names and the account name a little more clear because those are the two most important fields. From the bottom left, we click Item, New, and this is a service because for every asset we purchase that we will use the value in the future, we say we will get a bundle of services, which means use the value in the future. This is envelopes. And we will connect it to the supplies expense account. When we click OK, you can see we have an item that is a service connected to an expense. Next one, item, new, service, stamps. and of course, also connected to the same account, supplies expense. Click OK, and our items list is ready to go. Now let's do our first example. Let's imagine on August 3rd, we purchased 7 envelope boxes for $3 each and 5 stamp packages for $4 each from Staples. And let's imagine this is billable to client Betty. Well, if that's the transaction, what will happen in the trial balance when we pay Staples for these supplies? Well, obviously, supplies expense will increase by $41 because that will be the amount of the supplies. And because the money came from cash and bank will decrease by the $41 and become $11,809. Now, how do we do this? It's very simple. We open the check window and we make the date August 3rd of 2017. Okay, we're buying it from Staples. And we're not clicking expenses over here. We're clicking items. We do not put a money amount when we choose items. We do not put an expense account. We only click items and choose the items that we purchased. In this case, envelopes, quantity 7, and we buy them for $3 each. Don't make a permanent price. It's for customer Betty and it's billable. Also, stamps. We purchase them for $4 each. And in this case, we don't want to update. Don't leave a permanent cost or price. And we want 5 of these $4 packages of stamps, also billable to Betty Boop. And remember, you have to go line by line. It's possible one item is billable and another is not. So be very careful. Now that we're done recording the check the way we need to, we can click Save and Close, and we can open the trial balance and see the results are exactly as what we expected. Cash and bank decreased to $11,809, and supplies expense increased to $341, just like we expected. Now, we also have to check the profit and loss by client to make sure it was properly recorded under Betty. So, we go back to QuickBooks, profit and loss by client, and you can see supplies expense in the column of Betty is $91 now. And if you double click, you can see this check for $41 was applied to supplies expense specifically for Betty Boop, the client. Now let's bill Betty for the supplies that we just purchased for her. Let's imagine on August 4th, we billed Betty for the August 3rd supplies that we purchased. Now we're not going to mark them up. So if we're not going to mark them up, what happens at the moment we bill the client? Well, supplies expense actually goes down because we're putting those same items from that same check on a bill, which means we no longer have supplies expense. The client is responsible for it, which means unearned legal fees, which really should read legal fees receivable, because at this point in the course it's a positive number. Right now this 346 indicates what's owed to us. So because we billed Betty for $41 worth of supplies, she owes us $41 more, and it goes up to $387. So supplies expense goes down to $300, and unearned legal fees goes up to $387 at the moment we bill for supplies. So we open the invoice window, we make it the next date, August 4th, we make sure that we're using the proper receivable account, and we choose customer Betty. Notice we can select time and cost, but this time it's not under time and it's not under expenses or mileage, it's under items. And we will select each of the items that we previously marked as billable. Click OK, and now when you look at the invoice, you know the quantity and the name of the item and the price each that you're billing the client for, and the client doesn't have to guess what these expenses are. So that's one of the conveniences of using the items. And when we click Save and Close, and we fix this stupid thing and click Save and Close, when we come back to the trial balance, the results are exactly as what we expected. Supplies expense decreased down to $300, and cash and unearned legal fees increased the amount that they owe us to $387. And don't forget to check the profit and loss by client. When we go back to QuickBooks and we click here, we check the column of Betty, and we see that we now have less supplies expense for Betty. Supplies expense decreased to $50, and when we double click, you say, well, it increased by $41 when we wrote the check, but then it decreased at the moment we made Betty responsible, and that's why it went back down to $50 in the profit and loss by client. Now, please note, this is very important when learning about expense items. Account settings are not relevant regarding billing for expense items. Single-sided expense items, like the one we're doing here, decrease the expense account when you bill the client, regardless of what the preferences are set to. You must bill for the same amount you purchase. If you bill for more, you will have your expense account becoming negative. And that means you billed for more than you paid for it. And most times with attorneys and clients, you're not allowed to do that. But if you need to mark up the billable expenses, then you must use a two-sided item shown in the next video. So if there's a case that you have a billable expense and you want more detail and you want to make items, you have to watch the following video, and you'll do most of what we're doing here, but you'll make it a two-sided item. Now, also keep in mind, the preference will only affect the accounts, not the items. Remember when you clicked Edit Preferences and you went to the Time and Expense category and you found this little button? Yeah, that's totally irrelevant to this topic, because now we're not just using the accounts like we did in the earlier videos, we're using items. And if you use items like we're doing now and in the following video, this choice is not relevant. So keep in mind, account settings are not relevant for expense items, and if you want to keep expenses and track them as income and mark them up, use two-sided items that are in the video that follows this one. Thank you for your attention.